Thank you for joining KPMG's IFRS 16 Lease Accounting webinar. I'm Varun Bhatia, a partner with KPMG Lower Gulf, and I focus on advisory managed services. And I will be your host today. We are very excited to have you with us, and we look forward to a productive session ahead. As you may know, IFRS 16 specifies how an IFRS reporter would recognize, measure, present, and disclose leases. However, the implementation has been quite challenging for a lot of organizations. Defining the right process is one of the major challenges with IFRS implementation. And requirements are getting more stringent in terms of checks and balances. Any gaps in the process setup can actually put a question mark on the trustworthiness of financial disclosures. So today, my colleagues and I aim to share our insights and learnings with you on post-implementation experiences and challenges, and how a combination of the right set of people, processes, and technology can help make this a simpler, faster, and more accurate process. Today, I'm joined by my colleagues, Mr. Bhaskar Sahai. Bhaskar is a partner in KPMG Lower Gulf and has more than 18 years of consulting experience. He leads our accounting and finance team and has led more than 30 IFRS 16 implementation projects across a variety of clients. He is focused on making IFRS 16 reporting business as usual for our clients through the use of technology. I also have Mr. Yusuf Hassan. Yusuf is a partner in accounting advisory and is an IFRS specialist. He has over 20 years of experience in this space and has led the training and conferences on IFRS 16 both locally and globally. He has advised many large local companies on IFRS implementation across banking, retail, power and utility, and telco industries. And then we also have Mr. Feroz Karyali. Feroz is a director with KPMG and runs our managed services offering in the Lower Gulf. We also have our Technology Alliance partner from RO, Mr. Russell Yeomans. Russell is a KPMG trained chartered accountant who was a finance director in Australia before moving into a headhunting career that took him around Asia, Europe, and the last 10 years in the Middle East. He is an equity partner of RO Middle East and a group accounting software business who has worked very closely with KPMG over the last 3 years in IFRS solutions and consolidation systems. So now I'm going to invite my colleague Yusuf to take over and talk about his views on IFRS 16. Over to you, Yusuf.
Thank you very much, Varun. Great introduction there. And maybe let me talk briefly about IFRS 16 before we go into some polling questions on that. Obviously, IFRS 16 was effective in 2019, and now we 1 year into the adoption and application of the standard, and we've had a great opportunity to do a post-mortem on the standard. But before I go into depth on the standard, I would like to start with a few polling questions for you as the audience to think about, to contemplate, to probably go back to those memories or those dark memories for some of you on your implementation projects on IFRS 16. So what I would like to do before I get into the crux of our observations, or as I'd like to call it, my post-mortem on IFRS 16 adoption, I'd like to go through some polling questions just to get you as the audience to understand your views, your impressions on that. So throughout the session today, we will be having different polling sessions, polling questions, and we invite you to respond to these questions as we go along. Now, the first polling question I'd like to put forward to you is, what are the types? And if you're looking at your screen, you'll see this on the left corner, and you have a choice. Now, obviously, IFRS 16 is a comprehensive standard that applies to all leases, not just your real estate leases, and it has pervasive impact on your business. And we want to find out, probably just in the straw poll, what are the types of leases in your organization? Is it focused on real estate, vehicles, heavy equipment, office equipment, these smaller types of assets, or are you involved in other things? So we've set a time limit of 30 seconds. I think it's all over. The poll has ended. And if we can see the results of that. Okay, so look, I think obviously this is not going to add up to 100%. But look, what we're seeing is majority of people are, as expected, would have exposure to real estate leases. That's not uncommon in the Middle East. I think a lot of property is rented, branches, retail stores, presence in the mall. So I see some of you also have identified vehicle and heavy equipment. That's quite interesting. Generally, in our experience, we see that the vehicles and heavy equipment tend to be owned, but there are some situations where we are seeing leasing in that, especially with some logistic arrangements. Office equipment, quite interestingly, I see 33% are prevalent. And based on our experience, we see some people with the smaller office equipment have applied for the low value exemption. And obviously, I love this little category called others, which means there's a whole range of other possibilities of assets that are probably under lease arrangements. But no surprises here. I think the majority has been on lease. We'll come back to this point, and I'll give you some of the implications of this that we considered in our analysis. If we can move on to the next question. That's more of a question of how you manage to integrate updates on IFRS 16. So look, IFRS 16 has been a stable standard, but there have been some changes, especially around the COVID pandemic, how to account for lease concessions, because many companies, as a consequence of the lockdown, there has been concessions. There's also a lot of issues that are not yet resolved in IFRS 16, for example, sale and variable lease tax. And the question about these is how do we account for it? This question here aims to see how do you manage to integrate updates on IFRS 16? Do you go to in-house IFRS experts, third-party service providers, auditor inputs? How do you manage to integrate updates on IFRS 16? You need to be kept up to date. It's a reality. The standard is new. It's changing. And as I said, not all aspects of the standards have been resolved. Let's see the results of that, if that could come out. So I think, okay, that's quite interesting. So as expected, I think a majority of clients do rely on auditors for input, and that's fair. I think a lot of times we sometimes wait for the issue to arise. The problem with waiting for an issue to arise or an auditor input, if it happens too late only when the audit occurs, then it causes us a little bit of a problem. We won't be able to react. I think maybe the balance is probably, apart from the auditor inputs, or maybe getting the auditor input earlier in the process before the effective date or before you engage in the transaction could be very, very useful. And now the final question from my side, I want to ask you a different question. I know we're saying that this is a post-mortem of IFRS 16. My third question is, I know many companies have undergone a very, very heavy implementation process. It has been a challenging process for many of you, but I would like to understand that in this process, what have been the key challenges for you in your adoption of IFRS 16? Has it been data extraction? That means the collection of the data, collection of the lease agreements. Has it been the technical accounting issues? What is the lease term? What is my discount rate? All those are questions. How do I deal with transition? Or has it been tool implementation, where you say, hey, I've got thousands and thousands of leases. How do I manage this new accounting issue? Or alternatively, I mean, what's your biggest challenge? There could be business challenges. Where do I get this information? How does finance get access to this information? And operationally, how do we collect this information in the lease? Some of my leases don't even have lease terms attached. So, I mean, these are the types of things. What was your biggest challenge? Let's see what our audience says. Surprisingly, it's technical accounting. And that's interesting. That's a very, very interesting point in the implications and the application of this, that the technical accounting. And I do understand and acknowledge that the technical accounting would have had major implications on your numbers, But that's quite interesting to see that these are some of the elements that are challenging you and in your application. Now, what I'd like to do, I mean, now that I've just set the scene and got a feel for the audience and the views that you have, let me go through some of the impacts we've seen in IFRS 16. And I'd like to proceed on to the next slide, and let's talk about this. So look, IFRS 16 has had massive implications on people. It's one of these standards, unlike IFRS 9, which had specific implication for banks, and IFRS 15, which had specific and heavy implications for real estate companies and telcos. IFRS 16 had pervasive impacts on any company that had a lease. But the most impacted industry we have seen was the consumer and retail sector. Massive, massive challenges, massive, massive implications on the balance sheet and the income statement. Now, what was happening is there was a massive, massive uptake of debt that was never anticipated by a lot of retailers. And I think when we probed them with questions on lease term and discount rate, what we realized is some of these considerations were not even thought of. The net outcome of these implications was that there's, especially in the consumer and retail sector, a massive, massive take on debt. Also, in addition to the massive additional liabilities on the balance sheet we saw with a lot of our retail clients, we saw a change in profitability. Now, don't be fooled. IFRS 16, although is a focus, is a balance sheet focused standard, the implications on profitability are there. You will have a front loading of an expense over the lease term. So if you're in the early periods of a lease, your profit is reduced. And this was a massive, massive impact, specifically in our retail clients. And I cannot emphasize how badly or how severely retail clients of ours have been impacted by IFRS 16 application. In terms of the aviation sector, so David Tweedy's dream was that he was the chairman of the ISB, was always to get airlines to recognize the aircraft on their balance sheet. And IFRS 16 managed to achieve that. So I think in the aviation sector, look, people don't know, the airlines know where the aircraft are. What they have been carefully structuring these aircraft as operating leases, and the impact of IFRS 16 makes these operating leases finance. Closer to home, we've got some data. I mean, if you look at Emirates Airlines March 2020 financial statements, you will see clearly that the implication and the adoption of IFRS 16 has increased their liabilities by 66%. It's a massive, massive increase we've seen in the aviation sector. Healthcare, we've seen some changes, we've seen some challenges, in distributors, how to account for the various warehouse costs and the warehouse leases, which we consider to be historically operating leases and didn't really affect the business model and liabilities, but these things changed matters. In the transport and infrastructure industry, I think the bigger question we had was identification of the leases. If I'm a logistics company, is my arrangement with the customer a lease? And if it was a lease, yes, how do I account for it? How do I disclose it? And the users of those services also had massive implications and additional liabilities on their balance sheet. Banks and financial institutions were also impacted. I think, banks would, obviously, they don't focus on the PPE side of the balance sheet. But what they had to bring onto their balance sheet was additional long-term liabilities. So all in all, what we're trying to say on the impact of IFRS 16 is it brought new debt onto the balance sheet. And I think this was a consequence of IFRS 16 that was anticipated and expected, is all of a sudden, overnight, on 1st January 2019, you have new debt, new long-term liabilities on your balance sheet without you going through any significant borrowings. EBITDA ratios were changed, debt to equity ratios were changed. Some of our clients had fallen foul of their loan covenants because of a revised debt to equity ratio as a consequence of IFRS 16, which brings more long-term liabilities on your balance sheet. Moving on to the next slide, I'd like to just go back into the business impacts. Now, obviously, everyone knows about the accounting implications of IFRS 16, but what was that? What does that mean for my business? I mean, look, is it only a CFO problem? Is it only a problem for finance? Well, let me share with you some of the experiences of what we've seen happening on the business side. In the finance sector, a lot of what we found in some of our clients finance teams did not even have access to the leasing data. It was held by some administrative function, etc. And what would happen generally is a posting of a journal entry that, hey, I've paid a lease expense. All of a sudden, and with the advent of IFRS 16, the lease term, a discount rate, something that you never find in the lease contract, becomes more relevant. And finance had to play a more substantive and substantial role in the lease calculation, even in the lease negotiation. So this is quite interesting. And finance has to make a lot of decisions that have accounting implications. So whereas the leases may have been negotiated by an admin or a functional department, the consequences from an accounting side needed to be carefully considered. In terms of investor relationships, one of the big questions I've been getting from clients is, how do I do valuations of companies now that IFRS 16 is around? I'm getting new liabilities. Is there more leverage? How do I look at things different? Does it affect my credit rating? Now, theoretically, it shouldn't. Theoretically, the nature of your transactions and the value of your business hasn't changed. But what is happening is, what we've realized is, optically, when you are showing more liabilities on your balance sheet, there's a different impression of how the market looks at you. And this needs to be managed. Analysts always did an adjustment for leases, but we need to understand how other stakeholders and other investors look at your business. Do they perceive you as more indebted as a consequence of IFRS 16? In terms of strategy, this is the CEO, the strategy. Do you change your business? I mean, look, a lot of times people may have opted for leasing because they see it as an off-balance sheet means of financing. Now that IFRS 16 has closed that gap, do I change my strategy? Do I do something else? Do I rather buy these assets outright? Do I have different arrangements to avoid lease accounting where I get access to a pool of assets? So these are considerations and strategic matters that arose out of IFRS 16. It's surprising that we see that how such a shield in accounting, where we avoided a liability historically through IFRS 16, now caused a change in strategy. Treasury departments have been heavily impacted by this. I think, if you look at the ratios that were impacted, all of a sudden you have new costs coming out. You have new interest costs coming out as a consequence of IFRS 16. You have new liabilities. So although you as a treasury department did not go borrow additional money from the market, you have additional liabilities on your balance sheet. You have additional interest to manage, etc. All of a sudden, and this is something that you may not have traditionally controlled through your normal treasury mechanisms. A lot of people in treasury departments were concerned about the implications of that. In terms of employee benefits, we've seen a lot of challenges on this. Many people in finance departments are evaluated on EBITDA. Now, the consequence of IFRS 16, it increased EBITDA. Why it increased EBITDA? Because historically, the operating lease expense used to run through operating expenses and should be above the line of EBITDA. However, after IFRS 16, you've got new expenses. Your expenses are linked to depreciation and interest, which is bad for treasury. But what it does, it enhances EBITDA. When in the enhancement of EBITDA meant that people in finance departments seemed and appeared to be doing better, but through no consequence or no additional input or output from their side, but purely from that perspective. On the other side of it, a lot of lease accounting caused a decrease in profits. So if people's KPI was set or linked to profits, again, IFRS 16 affected that KPI. So it wasn't performance linked, it was more driven by a change in standard. Then because of all these changes, I think what brings it all together is how you derive the information in your business. I think collecting the lease information, how you're going to process this information, how you're going to do the calculations. Look, if you had 5 or 6 leases, the system question was an easy one. But when you have thousands or hundreds of leases, as we've seen with our retailers, it's totally imperative to have a system. You need to calculate your proper liabilities. You need to account for changes. Not all leases start on 1st January. Not all leases have, stay the same throughout the contract. Not all leases are renewed. Not all leases are not modified. So the reality is we need a system to get the accounting or in that. What I need to say from this is not IFRS 16 is not just an accounting change. It had pervasive implications on various aspects of the business. If we can move on to the next slide, I'll just share with you some other thoughts on what we saw on adoption. So as we said, we've been involved extensively in helping our clients adopt the standard. KPMG has done a global survey, and based on the results of the global survey, we asked our clients, what are your biggest challenges in IFRS 16 adoption? The biggest challenges we've seen, is obviously the business and operational implementation, which is 36%. But what didn't surprise me was data extraction. What was ordinarily a simple lease agreement, you now have to pull out data. You need to get hold of these things. You need to get things that are sitting in a filing cabinet into a system for a computation. And that was the hardest part probably for many of our clients here. The business and operational implementation, you need coordination. Then I see 27% of our clients saw the tool implementation. They felt, well, look, let us make our lives easier by getting something that computes this, that does this calculation, that helps us with this. Only 6% saw the technical accounting judgments as a challenge. Now, what were the technical accounting judgments? Let me help you through those. I think the biggest judgment we saw in the Middle East and in UAE specifically is the decision on lease term. How long is the lease term? And this is a very, very critical question, because if you have a longer lease term, then the liability is higher. But the question we always had to fight or delve or debate with our clients was, if you've got a 3-year lease with an option to renew for another 3 years, do I look at it as a 6-year lease or not? And the answer to that question lied in the definition of a lease term. Is it reasonably certain at inception of the lease that I will renew? Now, obviously, clients as they are would want to minimize the liability and try to argue a shortest period possible. However, we needed to look at the true estimation process in context. Also, a big question from the accounting side was, what is the discount rate? Technically, you need a discount rate for every lease. Theoretically, you would need a discount rate for every lease. And there were massive questions on what should be my discount rate on an ongoing basis. But let me continue on the slides as we go, and let me proceed on the slides. We'll go to another slide. Can we move to the next slide, please? Let me break down these and quickly explain to them. I think in terms of the data extraction challenge, collecting the lease information was critical. We needed to derive the information from somewhere, get the information. There are so many data points in a lease. We need to know the lease term. We need to get information about renewal options. We need to get information about variable lease payments, increments, etc. So we needed to get this information. It needed to be derived from somewhere. And then the other question we had to ask on data extraction, have I got all the leases? And then another question is, have I identified all the leases? In some, real estate leases are easy to identify. But what about this arrangement I have with my bus company or my transport company, where I use a specific vehicle to bus my staff to and from work? Is that a lease? Is this in the scope of IFRS 16? So I think getting the information about the leasing, getting the numbers, getting the lease contracts all prepared, getting that population handled is a big challenge. In terms of technical accounting challenges, I've spoke to you to some degree about the challenges. Lease term, disclosures, discount rate, these are some of the bigger questions we've had. How do I avoid a liability? What if I have variable payments? What if I have variable payments in a base? What if my rental is revenue-based? How do I do the accounting for these transactions? What if I don't know? What if it's an output-based lease payment? What if I have a service element embedded in my leasing contract? Do I remove that? Do I need to take into account VAT or do I exclude VAT? So these were some of the accounting questions that we needed to face and deal with. And as I said before, business and operational challenges were one of the biggest challenges we figured in our global survey. How does the business now deal with things like this? As Bhaskar will talk about later, how do you make IFRS 16 business as usual? It's not a one substandard that's going to, you have a flurry of activity in 2019. It's business as usual. Now you need a process, you need a system, you need to get the correct amount of data and deal with the situation properly. So these are the three challenges we've seen in practice. And I'd like to move on to the next slide. I'll share with you just some more implications on that. So these were the challenges we faced, and obviously my colleagues will talk more about how we resolve these problems through systems, etc. But what I'd like to say in terms of COVID-19, now COVID-19 is a reality. It has impacted the business. Now, there was a massive and a significant impact on lease accounting. Now, what was that impact? You see, due to the lockdowns, many companies, landlords and tenants, felt the need to give their clients concessions. So what they're doing is saying, look here, I'll give you a rent-free period, or I'll freeze your rent, or I will not apply increases, or something like that. Two consequences I've seen from IFRS 16 and COVID in relation to COVID. One, a lot of my clients went back and assessed the lease term. Why did you go back and assess your lease term? Some clients saw the effectiveness of an online platform and were re-questioning whether they should be in bricks and mortar property. So, I mean, a lot of times we assume the renewal option would have been extended. However, COVID has taught a lot of clients that, hey, wait a minute, maybe we don't need so much retail space. Maybe we can work on an online platform and maybe go back and revisit some of our assessments of lease term. That was one impact. But another more important impact where the ISB or the standard setter had to step in and fix things up was on this accounting for concessions, where you got a rent-free period or the landlord decided to have mercy on you in some form or the other. Tenants had a choice not to account for this concession or this mercy, as I'd like to call it, as a modification. Accounting for that as a modification would require complex accounting, a repurposing of your discount rate. What the ISB said, if it makes sense for you, if it is practicable for you, you don't treat it as a lease modification. This little concession that you've got, you treat it as a variable lease payment, which provided much welcome relief for a lot of our clients. All right, so I think that was big on COVID-19, and that's my last slide on that. What I'm going to talk about is I'm going to go now and hand over to Bhaskar. But before I do that, I'd like to just sum up on the key points that I've mentioned in the IFRS 16 challenges and technical session. The reality is IFRS 16 has had a significant impact, much more debt on the balance sheet, much more impact on the business, pervasive impact on various elements of the business, including treasury, strategy, systems. So I think it's not just a CFO game, it's a CIO, it's the CEO, and it's also the treasury implications that have been done. All right, so that ends my side. I think if we go on to the next section, my colleague Bhaskar will be taking you through how you can address those challenges of IFRS implementation using technology. As we said, it's business as usual. I hand you over now to Bhaskar, who will take you through those considerations.
Morning, everyone. I think a couple of things as we go along. We've now got over 100 participants, which is absolutely brilliant. It just shows how important the topic is and how much everyone is sort of looking forward to the views that we have over here. The other thing I just wanted to bring up was there is a button for Q&A. We will be taking Q&A towards the end of the session. So if you have a question, please type away and we will pick it up towards the end. With that, let me get into some of the more practical aspects of IFRS 16. I've been involved in quite a few implementations, so a lot of my sort of perspectives will be on how do you really make IFRS 16 come alive within your organization. So Renee, if we can start bringing up the polling questions. I'll start with a couple of polling questions before we sort of move to the slides. Perfect. So the first question, I think, it's an important question. How frequently do you run your lease accounting process? Now, when I look at my clients, many of them run it monthly for their MIS reporting. But then there are a number of my clients that also run it annually. Obviously, all of the companies which are required to report quarterly absolutely do run this on a quarterly basis, but there is a significant variation in what timeframes people choose to run the lease accounting process. Now, why do we ask this question? Because we'll follow it up with the next question, but to not steal the thunder, but many times we sort of see there are significant challenges in trying to run the process, and that's where CFOs and finance teams do not feel that they can run this on a very regular basis. So I think the time's up. So let's see on what frequency are people running this. Okay, brilliant. So most of you are running this actually on a monthly basis, which is quite good. Quarterly for a few of you, annually for others. So let's move on to the question after. How much time do you spend on lease accounting? And what we are looking for is an estimation of how many man days are you really spending on lease accounting throughout the year. So if you spend, let's say, 2 days every month, and you're doing the reporting monthly, we would expect that you're choosing answer B, which is for 24 days. So 10 to 30. If you spend 5 days and you do this quarterly, again, you would be in the 10 to 30 range. If you do it only once and you spend 30 days, then you should be in the more than 30. If you spend 5 days and you're doing it every month, then that's 60. So you should be selecting option 3. We'll just give everyone a few more seconds before the clock runs out. And I think 5 more seconds before we close the poll. Perfect. Brilliant. So actually, this is actually surprising because annually, if we're spending less than 10 days, that certainly is not in line with what I see with most of my clients. Most of them would be in the 10 to 30 man day range. Some of them with very, very large lease portfolios are beyond the 30-day range. So, some of my clients have close to a little over 1,000. One of them has a little over 5,000. So that lease portfolio just means that you end up spending much more time in terms of lease accounting, and that tends to be pretty high. But that's very, very effective. If most of you are within 10 days, that's quite commendable, to be fair. If we could move to the slides, please. So when we started implementing IFRS 16, the key challenge that came up, and I think a lot of you picked up on that in the initial poll, was the technical accounting. But then to make it business as usual, the real impact was what sort of technology platforms are you really using to make not just the process efficient, but also very effective as you go along over time. If you look at where everyone started, most of my clients and most of the companies across the globe started with Excel-based solutions. And they needed that to just do an impact assessment, and then they wanted to validate their technology systems, and we're looking at that Excel tool as almost a UAT tool. From there on, they went into this whole pull and push of the timelines that they needed to sort of maintain with IFRS 16. As many of you have acknowledged, yes, monthly is best. And that is what we recommend, that you should be able to run IFRS 16 numbers on a monthly basis. Where that really created a challenge was the data formats and the harmonization around that. Now, why was this a challenge? Because many of the systems were not completely integrated. So many of our clients were dealing with an ERP system and a separate IFRS 16 tool. And on many occasions, these were sort of manual processes to really sort of download data and upload data into one or the other. And that created some stresses and some friction in the process. From there on, I think many of the companies have really progressed into making IFRS 16 business as usual. And they've really been sort of very diligent in really focusing on doing this over and over, where they've now got most of these challenges under control. From that perspective, what we wanted to do was also showcase one of our key case studies. If we can move to the next slide, please. And you'll see that this entity, this is one of the larger sort of lease accounting entities, because while they had only a little over 200 contracts, the value of these contracts was pretty high. So it was one of the entities which was very, very heavily impacted by the new IFRS 16 standard at that time. When they started looking at the implementation of IFRS 16, where they really faced the challenges was integration with the ERP. Now, this client was going through an ERP implementation as well. So it became even more sort of challenging because you're going through a transition and you were looking at an IFRS 16 implementation as well. Again, very, very strict on security requirements within the entity. Loads of challenges with change management. Obviously, you would expect if you've got more than 200 leases, you are sort of impacting a very, very key process within the entity. So it was not just accounting, but as Yusuf was pointing out, the business processes around leasing as well. So when they were sort of looking at lease accounting, one of their key questions was, and this client wanted to sort of have minimal liabilities as much as possible. And therefore, the question came around to how do we really structure the lease contracts in a way that our lease liability is not is optimized. And from there, we sort of started working on the project where we did an impact assessment, and then we looked at the processes. We looked through what sort of technology tools we should be bringing in. While change management really came across on this slide as one word, it was probably the most important aspect of the whole project to really bring the not just the finance team, but the business team along on the journey as well. And that's where we focused our efforts. If we go to the next slide, please. So when we looked at the whole holistic picture, our work sort of went into three different aspects. So the solution design and deployment. So this is where we really looked through how would you focus on your IFRS 16 processes and how do you make them work within this organization. The migration and testing became incredibly important, and then came in the go live support. Now, why are we talking about this? What happened on this? And it's also introduction to Russell, who's coming in next. We partnered with RO on this implementation, and that's where we realized the power that a good technology tool really brings to an IFRS 16 implementation. And as we go along, Russell will talk a lot more about this, but when we started thinking about how can we help our clients, and we said, okay, most of our clients do want a managed services aspect to IFRS 16 or many other IFRS solutions, we said, okay, the best technology solution that we would want to go with is RO, because it's been so successful in many of our clients. So that's where we really sort of shaped this KPMG and RO partnership from a managed services perspective on IFRS 16. With that, if I can invite Russell to sort of come in and talk a little bit more about the technology aspects and how does a company sort of look at the problem and how do you really solve this IFRS 16 problem. Russell.
Many thanks, Bhaskar. And I guess we're delighted as a partner of KPMG to be invited into this webinar and also extend our partnership with them. So I'll let Renee put a couple of questions to you as well, while I at least just introduce sort of us and what we're going to quickly talk about. But we're, RO are a 30-year-old consolidation and group reporting company that also help companies in terms of IFRS compliance. So we developed an IFRS dedicated solution probably 2.5 years ago in 2018. And to give you an idea, that tool has gone through about 9 iterations in terms of its current form. And we've implemented it successfully in over 100 clients. So we've learned a lot along the way, and we'll try and sort of share that experience with you. But in terms of the questions here, if you could please answer those questions. So what I'm going to talk about today is, one, what are the practical aspects that you, as in selecting a tool, should begin to think about in a dedicated tool versus a spreadsheet solution? And I'll be interested to see exactly how many of our clients are using spreadsheet solutions still, but with our experience it's considerable. The second element that I'm going to talk about is when you analyze systems, dedicated IFRS 16 systems versus Excel, why should a system make more sense over time? And then finally, just when you're looking at the different solutions that exist in the marketplace, what characteristics should you be looking at? So I think there's a couple of questions. If we can look at the efficiency improvement, and also, Renee, if you can ask the question about which tools our clients are using as well, then we can elaborate on that. But if you can please go to the next slide, Renee. So these are practical aspects that you, as a finance team and IT team, should be looking to address when selecting a tool. First, it is a key decision in do you use a dedicated tool for IFRS 16? If there's one thing that's become apparent through the presentation so far, are some of the technical challenges, workflow challenges, and balance sheets, and the implications of IFRS 16 goes far and wide. And very quickly, spreadsheet solutions literally are just not addressing some of those key issues. So one, it's becoming more apparent that our clients need tools versus spreadsheets. Secondly, everything is about money nowadays. We're all going through budget constraints. So how do you make that decision in terms of which tools to use and how to invest in those tools? And one of the errors that we see many of our clients doing is when they're looking at the budget constraints, they don't actually truly evaluate the amount of time and effort that's been spent already in IFRS 16 solution. As Bhaskar mentioned, many of his clients sort of spend a lot of time on this. And when you're looking at the benefits of a tool solution, it's important to look at time as much as the obvious costs associated with solutions. I think nowadays, solutions need to be either implemented on the cloud or on premise, depending on the security and IT needs of clients. So generally, more and more, we find that we need to be able to offer both solutions as an implementation tool. And then the tool has to cover all possibilities under IFRS 16. Again, as has been mentioned already, there's been huge technical challenges in change, even during COVID. And, as we've worked with the IFRS 16 issue and our tool, remeasurements, modification, impairments, decrease in scope, concessions, rental holidays, asset retirement options, these are all been technical and practical difficulties in implementing a usable and reliable IFRS 16 tool. And all those we've had to develop solutions for within the model. The fifth point is more when you look at IFRS 16 tool versus management tools, is there is a very specific need around IFRS 16, and ultimately, we are, as a consolidations solution business, it is our job to come up with a solution that can manage the compliance needs of IFRS 16. Now, that does not necessarily handle all the lease management issues. So when you're looking at a tool, it's not just the management of the numbers, it's also management of the lease management across the business. So sometimes it's important to differentiate the accounting challenges from some of the administrative challenges when you're looking at a tool. In terms of user acceptance, I think a lot of companies, when they're developing their own tools and spreadsheet solutions, there's a lot of time spent on user acceptance. Generally, I think if you're looking at an IFRS tool solution, that needs to have been done. So you need a tool that's actually been proven to handle a lot of the issues around, and therefore as little time as possible should be wasted on user acceptance. And then, of course, you've got ongoing support and future proofing, which we'll talk a little bit more about. But you need sometimes, with this, you need a lot of technical support, which we'll talk about as well, which is separate to the tool, and that's where KPMG excellence and experience of Bhaskar and Youssef comes in. But you do need ongoing support in terms of the system operation, and you also need future proofing, which essentially is a constantly updated tool that's adhering to the changes and experiences around IFRS 16, for example, the implications of COVID. Just going back to the poll, it is very interesting that still we have 65% of the audience that essentially are managing IFRS 16 through the Excel model, despite all the challenges that Youssef and Bhaskar have brought up, and 18% using sort of lease account software. And there's nobody here that's actually looking at a third-party solution, which actually can take away all the headaches of IFRS 16. So please, next slide, Renee, and we'll just talk about why we think, obviously, as a provider of a IFRS 16 tool, you would expect us to agree with this, but there are significant advantages in using a system-based solutions, and also needs in terms of versus Excel. I think it's very interesting to actually think of IFRS 16. It has been a much more complex challenge for organizations than I think anybody thought when it first came in. And as I mentioned, the remeasurement, the modifications, the decrease in scope, the concessions, the rental holidays, a lot of these issues have provided ongoing challenges. So in some ways, a sub-ledger solution just begins to make a lot of sense. You don't consider to run your accounts payable, your accounts receivable, your fixed assets once they get to a certain level on Excel. And I think it's the same with IFRS 16. So a system essentially allows an organization to develop a sub-ledger type solution to the needs of IFRS 16. And I think it's very interesting also in the amount of organizations that are still only maybe doing IFRS 16 quarterly or annually. And we've got some of our clients, because of the challenges of it, they're not doing it monthly. And therefore, a lot of their monthly results and quarterly results are not necessarily reflecting the huge impact that IFRS 16 has, both in terms of their management accounts and financial accounts. I think the second issue around a system is the control. Certainly with our clients, there is a lot of control required to limit the access of IFRS 16 to ensure that only the right people are implementing the information and seeing the information. So there is a data security issue around, and a good system-based solution should enable you to control exactly who has access to the system, who inputs, and who actually sort of uses the information and prepares the final journal entries, which is ultimately a critical output of the whole IFRS 16 process. I think the third issue, it's very relevant when I talk about what are the true costs of IFRS 16, is that a good tool can give you a very strong audit trail. And certainly for us, the fact that our tool has been essentially validated by all the Big Four and the KPMG are working with us, that's a huge impact, and that can save a lot of time and a lot of money in terms of the because I know a lot of organizations do end up relying on their auditors to sometimes provide the IFRS 16 inputs. And then finally is the efficiency, and the efficiency is just the power and the advantages of an end-to-end solution. And a good end-to-end solution does not just provide the figures at the end of it, but enables an organization to have the right systems, the right processes, and ultimately to deliver those journals quickly and effectively. And, I know that we've worked with clients that have got up to 7,500 leases, and we've been able to implement those leases once the data extraction is correct, once the tool is rightly set up, that the implementation and the running of the reports each month can almost be done in minutes. So I guess finally, if you become convinced that a tool-based solution is definitely going to improve on an Excel model, and 65% of you are still very, very much reliant on Excel models, if you're looking at a tool, what should you be looking for in that tool? So final slide, please, Renee, for me. So when you're looking at the solutions, I think an IFRS 16 tool should provide constant updates. As I mentioned, I think we're up now in terms of the RO tool to our 9th iteration. There's constant changes going on within IFRS and within our clients that constantly ensure that we need to be updating this tool to make allowances for that. I think secondly, a tool that does derive benefit in terms of allowing you to better develop a calendar and a workflow, because often IFRS 16 is required to be done before any management and financial information can be produced. So the calendar and workflow and timing of the inputs does need to be crisp, and you need a system that can help you with that. Access management to ensure that you've got the right level of access and management within the tool to ensure that the right people get access at the right time. And I guess finally, a tool that does give you a consolidated view and that gives you the drill down and the analysis. Because people more and more, they need to know what impact IFRS is happening on their original results, on their management results and their financial results. And often you need a consolidated view, not just the whole business, but then drilling down by business units. There's a lot of complex groups. What impact has it had on different elements of the business, etc. And I guess the final point, in addition to these, is the technical and accounting support. So although, obviously we're delighted to be providing a tool that KPMG use, I think if one thing that this seminar should have emphasized is there's a lot of technical things to consider around the IFRS in terms of deciding what a standard lease is, what impacts the new standards have, discount rates, what to use, when and how to account for impairments. So a combination of the right tool together with technical expertise, I think, is what you will all need over time. And it's interesting that this is still a huge topic, almost 2 years now into when IFRS 16 became compulsory. So I think that nicely hands over now to Faraz to talk about the KPMG lease management solution. So thank you for your time.
Thank you, Russell. So as we discussed various issues or the challenges which is there in implementing the IFRS 16, we have actually thought of a solution which can actually blend the tool and the sort of the services together from the accounting side. So if you can change to the next slide, please. So as Yusuf, Bhaskar and Russell has clearly discussed the key challenges over the IFRS 16 accounting, which primarily, which I want to cover is basically one is the Excel model limitations, where I do understand there are a lot of version controls issues, and even from the where there is a change in the standards, it's difficult to change and modify the model as well. Now, even if you talk about, say, IT tool, there is a cost involved, and there are the challenges of implementing a tool. Along with that, there are challenges with integration with the existing ERP system as well. Apart from that, this also gives a burden on the finance team, and generally this leads to the delay in reportings, and specifically when we talk about the year-end delays. There are other issues because there are like an updates when it comes. This is one of the challenge where finance team is difficult to cope up with those changes and ensure those changes have been incorporated or has been considered while they are basically finalizing their lease accounting. So hence what we did is, to manage these challenges and to ensure there is a least disruption in the regular business and accounting operation, we introduced KPMG LMS, which is a lease managed solution or lease managed services, win collaboration with a technology partner, RO. And needless to say that our services are backed by professional qualified teams, which also includes an IFRS specialist. So our IFRS specialists ensure any changes or any kind of issues or any sort of like updates has been taken care in the tool as well. Now, the other part is the flexible reporting. Now, as we talk, we have loads of reports which is available in RO. This can be provided to the clients as they need, and this can be modified to some extent, and this can be managed as per the requirement of the client. And as I mentioned, the constant update is where the IFRS expert is involved, and they ensure the updates of IFRS 16 is taken care in the tool. And apart from that, you get a regular disclosures and a journal entries from our side. And this also could be integrated with your ERP system, with obviously there will be some plugins to be put in place. And more important is our service is more like an plug and play options. There is no long-term commitment. This can be like start with 2 months, or even like say, if you want to sign up for a one month period for the testing purpose, even those options are available with us. And this will, more important is to ensure that you don't have to put a very big budget or a financial commitment upfront. Now, apart from the accounting side, we also ensure that the lease inventory data, as Yusuf mentioned earlier, the data extraction is one of the challenge. So lease inventory management, or we can say the inventory data management, and ensuring the reminders for the deadlines where the lease contract is expiring. These all will be taken care from our side, and our competent accountants will be ensuring those reminders are set, and you get those kind of reminders on a time-to-time basis. And the last is most important is our service is more from the outcome-based pricing. So what it means is you don't have to pay for implementing a tool, you don't have to pay for the sort of man days, but you're paying for the number of contract which we are managing for you. So this is purely based on the contracts which basically you want us to manage. And being this is a web-based tool, you can actually access the data or the reports also on your laptops or on your iPads. With this, I end my session, and I request Varun to take a Q&A session.
Thank you, Feroz, and thank you everyone for sharing your views. I think it's been an interesting session. We have had huge number of participants. There are some very interesting questions that we have also received on the Q&A. Some of the questions are overlapping, so what I'll do is that I'll try and consolidate those into sort of a succinct manner. I think a lot of questions are around the impact of rent concessions, especially during the COVID situation. How do you account for any rent concessions or changes over the last few months? The world has changed quite significantly. So Yusuf, do you have any views on scenarios where the rent concessions have created an impact on the accounting process, and how would you handle that?
It's a very, very pertinent question. It's probably the most important question on COVID that has happened this year. So basically, look, there are 3 types of rent concessions we see. One is purely a forgiveness of rent. So the landlord says, I don't want you to pay rent. The other is a deferral of lease payments, where he says, I don't want your rent for March, April, May now, I want it later. And the third scenario we've seen is a deferral of rent payments plus an increase of lease term. Now, normally these kind of things would be treated like a lease modification, which means you recalculate the lease liability and you recalculate the discount rate. This is a tedious exercise. So the Standard Chartered this year, purely on account of COVID, has said, look, if you want to, as a practical expedient, we will allow you not to treat it as a modification, which means don't go and relook at the lease, the discount rate. Treat it as a variable lease payment going forward. So yes, you will adjust your liability, but no need to relook at the discount rate, no need to do recalculations. Now, will this have an impact on you? Yes. In different situations, we've seen increases in profit. Obviously, it's an advantage to you. For you as a lessee, it is an advantage to have a reduction in rent payments. So there will be some kind of income statement positive impact. From the landlord perspective, it's completely different. The landlord perspective or the lessor doesn't get this concession. He has to account for this as a lease modification, which affects his numbers. I hope that's clear. If you want more details, we can share with you a publication on lease modifications after this, and I'll make sure Renee shares with you all the different scenarios and examples are dealt with, which will help address your question. Thank you for the question.
Excellent. Thank you, Yusuf. I know we're running out of time, so we have probably the time, for one more question. And I think we've also received some sort of repeat questions on this topic. So, is it better to have a custom IFRS 16 tool, or is possible to modify existing tools? And I'd invite Bhaskar and Russell to answer this question.
Let me take a stab at that first, Varun. So a custom IFRS 16 tool, I think the way at least we view it, and this is what we've been telling our clients from probably 2 years back, is a custom tool makes a lot of sense if you don't have the right tools available in the market. In an IFRS 16 world, there are a number of different tools available with different providers. In my mind, it would be better to go with something which is tried and tested, which is been audited previously, rather than try to create your own. Russell, would you want to comment as well?
Yeah, thanks, Bhaskar. Obviously, maybe it's a loaded question for where I come from, but look, I think as we've all seen today how complex IFRS 16 has been, and I don't think we've probably come across the last challenges. We don't expect another COVID, but there's always new issues coming in. So I think it's I think without doubt the most efficient solution has to be what I would call an off-the-shelf IFRS 16 solution that can be customized for a client depending on their complexity. And whether that's RO or else, I think that's important. You don't want a tool that you're constantly going to have to be remodifying, constantly have to developing. Rely on a tool service provider to spend that time and investment and use the most efficient of what's out there.
Excellent, thank you. So I think in essence, it's a combination of the technology that you're using, the skills that you have internally in your organization, and the process that you define. So it's always going to be a process, people, and technology combination as the secret sauce to run these processes successfully. I think with this, we've pretty much come to an end of our session today. I would just ask our colleague Feroz to quickly talk about if there's anyone interested in getting a combination of the people, process, technology, managed solution, what would your pricing be like?
Thanks, Varun, for this question. So as we discussed, this will be outcome-based pricing. So it depends on number of contracts which client wants us to manage. So if I give a rough estimate number, it will be around, say, $1 per contract per day. So this is something which is reasonably priced, ensuring that company don't have to pay a significant number, and ensuring that they don't have to pay upfront any specific number for implementation as well.
Excellent. Thank you, Feroz. And to all our participants, thank you very much for joining us today. It's been a pleasure, having you on this webinar. If you have any questions, please feel free to contact us. Drop us a note. My colleagues and I will be very happy to answer any questions or any concerns that you may have had. Once again, to all our participants, our panelists, thank you for joining, and have a great day ahead.